Bitcoin price report for October 4th, 2022. This video is for educational and informational purposes only. Last week in major news, the Bank of England intervened and pledged up to £65 billion in support to purchase long-term bonds called gilts in the UK. It had to bail out a large pension fund that became insolvent because of falling gilt prices due to increasing yields. The intervention seems to have lifted the pound sterling higher, back just above previous support levels. However, overall this just may be temporary, so we'll have to monitor the situation closely. This does put into question the true value of long-term sovereign bonds when central banks around the world have to keep buying them, even as nations get more and more in debt. This past weekend, there were rumors that a major global bank was on the brink of collapse, and many speculated it was Credit Suisse, and that its collapse would be the equivalent of Lehman Brothers, similar to September 2008. That was a pivotal event on the way to the great financial crisis. However, on a positive note, on Monday we saw a net increase in Fed liquidity of $196 billion. This is a significant change and probably led to the surge in stock prices, but this change is likely temporary without an official change in Fed policy. You should follow Max J. Anderson to follow net liquidity and its correlation with the stock market. On to the Bitcoin price. In the morning it was 19,939, up 3.6% for the day, but down 1.4% from last week. If you look at the technicals, Bitcoin prices are still very close to the very strong support level around 18,550. The support may hold if the broad stock market rallies, but if not, we could have a rapid decline down to the 10 to 14,000 levels or lower. So I wanted to execute a Bitcoin investment strategy I spoke to you about in an earlier video that's called the dollar cost average and limit order strategy. You can buy a fixed amount of Bitcoin every month so you don't have to time the market. At the same time, you can place limit orders at lower costs. So if there are certain market disruptions and prices go down significantly, you can buy Bitcoin for cheap. So we'll start with 12,000 in capital. I purchased 1,000 worth of Bitcoin, which is 0.049157 Bitcoin at a price of 20,343. So we'll start buying monthly starting today. I'm putting the following limit orders for the remaining 11,000 in capital. These are orders of $1,000 for Bitcoin at a price of 18,800 all the way down to a price of 8,800. Typically, exchanges will require you to calculate the Bitcoin amount instead of enter the dollar amount. So the amount in Bitcoin for each order is listed here. If we get a crash in Bitcoin prices in the next few months, we should be able to get Bitcoin at discounts. If not, we'll just accumulate monthly, whatever the price is each month. We'll give you updates on this portfolio in this video series. Let's talk about the macro this week. The S&P 500 broke through the 3650 support at the end of last week, but in the last couple days have reversed with incredible strength above it. The next resistance levels are around 3,900 and 4,100, and if it breaks those levels, the probability of getting one last crack-up boom before the final crash increases. It does seem unlikely with all the global economies heading towards a recession imminently, but that is a scenario we have to consider. The Nasdaq QQQ has bounced off major support levels of 11,000. Gold has broken with strength above resistance and previous support levels of 1682. Silver has bounced off its previous support around 1831 to close to 21, which is a resistance level. Oil bounced off its support at 77 to its first resistance at 86.7. The dollar broke down support levels of 110.9, and the next support level could be 107.7. The temporary weakening of the dollar could ease global tensions and help investment assets rally. That's it for this week. Please like and subscribe for the micro, macro, fundamentals, and technical analysis with a focus on the Bitcoin price.